Thanks for coming back to the latest episode of the Credit Clubhouse. We are your one-stop shop for all things credit. Before we jump into our next episode, we have an exclusive offer for our listeners. If you're interested in attending any of our conferences throughout the year, we have a great deal for you. Just head to www.DealCatalyst.io, pick the event you want to attend, and enter the promo code CREDIT at checkout. This will give you 10% off any ticket to any conference. As always, don't forget to follow the show, rate us, and leave a review. We encourage your feedback. It'll help us make these episodes a better listen for you. And now, on to our next episode. Welcome back to our latest installment of the Credit Clubhouse. As always, I'm your host, Todd Anderson, head of content and programming at DealCatalyst, and I'm very happy to introduce my next guest, who's certainly an old friend, my old boss as well, Peter Renton. Peter, good to see you again. Thank you for coming on the show. How are you doing?
I'm doing great. Always great to chat with you, Todd, and thanks for reaching out to me.
Of course. So I had another friend on recently, Phil Goldfeder, who, in our episodes, he said, Fintech lending is stronger than ever. And what say you to that?
Yeah, obviously, I've got a lot of respect for Phil, and he is one of my favorite people in fintech. I think he's exactly right. I mean, fintech lending, it doesn't make the headlines that it used to make back when we were running Lend 10 years ago, but it really is doing, I think. It's doing huge volumes. There's lots of innovation happening. I mean, just look at the term loan, the consumer loan that Lending Club and Prosper popularized back in the day. That continues to get great traction, but there hasn't been a whole lot of innovation happening there.
Yeah.
There's innovation in other areas, like BNPL is a lending product that has grown in the last decade. That has been monstrously successful. Then you've got like embedded lending with I think some of the companies that are focused on the small business space. There's a lot of embedded lending happening there that I think is just got a lot of potential. We've seen a lot of things with credit card innovations. I think we've seen and the reality is that every fintech who has scale now is getting into lending. Either they're in lending already or they're getting into lending, and that's that. So I feel like fintech lending itself is booming.
So if we wind back the clock a little bit to when you first became aware of what was back then called peer-to-peer lending, what did it look like? How'd you get into it? Why did you get into it? I mean, you started writing about it. Tell us a little bit about the origin story around peer-to-peer lending.
Yeah, so the origin story is in 2008, July of 2008, I sold my second company, and then, as we all know, what happened the second half of 2008. Thankfully, I kept everything in cash just for the first few months as everything was kind of falling apart. And I was looking for different ways to generate fixed income because interest rates were at zero, and that hadn't happened, in my lifetime. And so discovered an article on peer-to-peer lending. It was actually about Prosper I think it was Money Magazine back in 2008. This was late 2008, and started doing a little bit of research. And then, I discovered Lending Club, opened an account, put a little bit of money in, and then really thought this was a great vehicle. I was getting double-digit returns on my investments, while interest rates was zero. And even like corporate debt was really, really low interest rates. So I felt like at the time, this was an incredibly appealing investment. So started putting more and more money into it, and started writing about it. As you say, I started investing in 2009, started writing about it in 2010. And, I was writing every day. I was writing about this new investment investment asset class, and got to know a lot of the leaders in the space, and that led to an event. And here we are. Like, this was 15 years later, and it's while peer-to-peer lending itself hasn't reached its potential, the fintech lending is what sort of spawned out of it. I think, as I said, is incredibly has been incredibly impactful.
When did that shift happen where it was majority peer-to-peer to institutional peer-to-peer? Now I'd probably say there's no real peer-to-peer except for, probably crowdfunding, which people do, and it's more for causes. But that traditional peer-to-peer angle to it has kind of really disappeared.
Well, don't say that. It hasn't completely disappeared.
Okay.
I still have my Prosper account that I opened up in 2010, and it's still going well. And so it's not huge volumes, but I talk to the Prosper CEO semi regularly, and he says, look, it's really sticky money during the pandemic. That money stayed on Prosper, and they were able to still
Wow.
lend from where everyone else was closing down their investments. So there is still money out there. Just it never reached the potential we thought. It's not really at scale very many places at all. But when it started to change was really 2013, 2014, we started to see some bigger money coming into the space. I remember when Colchis did an investment in Prosper. It was 150 million, and at that stage, that was a little bit before. That was like 2011, if my memory serves me correctly, and it was just groundbreaking that a company like that would put that kind of money in. But then it started to get more and more, and we saw lots and lots of the credit funds come in. The credit funds would start, and lending clubs started their own. We had lots of the sort of stickier money, the endowments, the pension funds, sovereign wealth funds would come in. That was really getting going in like 2015, and once that happened, the peer-to-peer aspect really started to fade, and we saw Lending Club shut theirs down. I think it was 2020 that Lending Club shut it down. Prosper's still going, as I said, but there's most of they changed the term was changed to marketplace lending. That was 2014. Charles Moldau at our event in San Francisco changed the term to marketplace lending, and it's sort of been known as that for the most part, and the peer-to-peer aspect has been continued to be de-emphasized.
Now it's all just lending. And it's
Right.
done. Everything's pretty much done online these days.
Yep, indeed. Really, it was the fintech lenders, those early peer-to-peer companies that were trailblazers in getting that and making that happen.
Do you think that, it happens maybe not to the same extent, but you think the impact of lending money online would have been the same without the GFC?
I think everything would have happened eventually, but that accelerated it, because that's where we saw, like Lending Club and Prosper were both started before the GFC.
Yeah.
But coming out of that, they really started to reach scale, and there was other companies that were started coming out of that as well that are now at scale. I mean, I think everything's moving online. What the original peer-to-peer lenders did was that they proved that you could acquire customers online and successfully service them without any kind of human interaction. That had never been done before.
Which leads me into the next question, given how simple it is to get a loan, whether you're at a checkout or if you go online. Has credit become too easy to access in today's environment? And I know you're passionate about fees and exorbitant rates. What about your thoughts around the ease of access? I mean, I can go online and probably get a loan in less than 3 minutes.
Yeah, well, you have a pretty good credit score, Todd, and so it's fairly easy for you. I would say that I don't think this has been a bad thing at all. And in fact, I would even argue that we have further to go with credit access, because it's still now that like then things start to become uncertain. You talk to the fintech lenders or any of the lenders really over the last couple of years. Many of them have tightened their credit box, and if you have good credit, it has never been better, never been easier. You're dead right. I mean, I remember when I actually I took out a home equity loan with Figure doing some work on our house, and I thought I thought I would do that. I really wanted to, was curious about their online flow, and this is a home equity loan. It was actually a home equity term loan, not a loan of credit, and it was incredibly easy. But it was incredibly easy. The technology that Figure built is fantastic. Um, and I've got also a very good credit score. But I think where it's still not easy are the people that are the sub 700, near prime, subprime. There's still the vast majority of these people are still not they're good credit risks. The vast majority of them, they might have had something happen that dinged their credit score, but you look at a lot of them have never defaulted on a loan in their life. And it's just a case of being able to bring more information to bear on those sorts of people. So I would say it is really easy to get a loan, and it's like if you want to sign up for BNPL, I think like companies like Afterpay, I think they just give you $200 without doing a credit check of any kind. So there is easy money out there, but once you start to move down the credit spectrum, move up as far as how much money you want, it's still not easy. And I would argue fintech has still not completed the job, where we need to make it easier for identifying those subprime, near prime people who deserve a decent interest rate, and are still not getting it today.
Which innovations, kind of what's most exciting about this market today? You clearly still have a passion for it. You have your own podcast. You mentioned to me how many events you're kind of helping out with in the fintech space. I mean, why is it such a passion still today?
I still love fintech lending. I mean, I love all fintech innovation, but my first love will always be the lending space, because that's kind of where I grew up in fintech really, and got to know the industry. But I would say there's still a lot of innovation happening. And my favorite innovation in lending in the last decade is cash flow underwriting. I think that has had more impact, continues to have more impact today, and it's getting at the problem that I said, that the access to credit, because the subprime, near prime space, it's becoming almost I wouldn't say quite standard yet, but it's almost becoming a must-have. If you're underwriting people in that space and you're not doing cash flow underwriting, you are behind the curve. Cash flow underwriting, that is really going through you're getting the contents of a bank account and looking at the last year or 2 years of transactions, and be able to make sense of that data and make an intelligent underwriting decision. That's really what I'm talking about here. And what that has done now is it's two things. It's increased the amount of people that have access to credit, and it's given them better pricing. Though, and that I think is really exciting for consumers, and that's also not just in the consumer space, it's all the small business space as well. There's a lot of cash flow underwriting happening there. So I think that is a lending innovation that I'm really excited about. And the other thing on the small business front, I think this sort of the embedded lending, vertical SaaS is a hotbed right now of innovation in the fintech lending space. Pretty much every industry has software that is specific to that industry, that helps small businesses run their business, whether it's a restaurant or a barber's shop or an Uber driver or whatever it is, a florist, yoga studio. There's software that helps them run their business, and that software has incredible intelligence in it, and it's become there's a lot of the fintech lenders like Pipe's an example where you can just plug in Pipe into your SaaS business and start making loans. And so that is the kind
Yeah,
of thing.
I had Luke on the show a few episodes ago.
Okay, yeah. Well, Luke's one of my favorite people as well. Super smart, and I think that's an innovation that is still playing out. It's not nowhere near 100% penetration yet, and it needs to be. And I think that's another piece that's really exciting.
Regulators. So my favorite topic. Um, we're seemingly entering what is being deemed a more friendly regulatory environment. And I think Phil put it interestingly when I talked to him is that it seems like we're skipping past fintech and we're kind of servicing or trying to figure out what to do with AI and crypto. We've been trying to figure out crypto for quite some time now. And that we're kind of leaving fintech a little bit in the dust because fintech is actually serving people today.
Mm-hmm.
Where AI and crypto, there's still a lot of theorizing around where that technology should be used best, especially in financial services. I mean, what do you think about the regulatory environment that they're in? And then, secondary question is how afraid or worried are you related to the consumer protection part?
Okay, so the first thing I feel like I should defer to Phil on all matters of fintech regulation. He is far more knowledgeable than I am about all that. But I will say that yes, I mean there's only so much focus that the lawmakers in Washington can give, and they're giving it to AI and crypto right now. So yeah, the fintech issues that we've really focused on, like trying to get some sort of federal EWA law. I mean, we had all the CFPB stuff. I mean, I feel like the CFPB is just it's neutered right now. There is very little coming out of that, right, and there won't be for probably the next 4 years. So that means, and that was sort of one of the areas of fintech, like the open banking rule, for example, was something that fintech was very excited about, and now it looks like it might be rescinded, and that I think will be a real setback for fintech, and I think that that it's a problem that I feel that banks are in this situation right now where they are much more in control than the fintechs when it comes to lobbying and when it comes to changes
Oh
in
yeah.
financial regulations. So yeah, so fintech is been it's not going to be front and center for the next 4 years for the most part. And as to the second part of your question, the consumer protection piece, I am actually not that worried about that.
Okay.
Even though the CFPB is losing it's losing its teeth. It would be a pretty brazen bank CEO that says, "Yeah, I know the CFPB is not going to really be going after us for the next 4 years, so I'm just going to ignore consumer protections, and I know I'll be fine." Because in 4 years' time, it's always possible that we're going to have a Democratic president and a Democratic-controlled House and Senate. That's, we've come a long way from that right now, but it's still possible. And so if you do some really brazen things now, the next Democratic administration is going to come in and say, well, you really shouldn't have done that, and here is a cease and desist and a fine and all these other sorts of things. So I feel like banks know the consumer protection is important. They might try and get away with a few little stretches here and there, but they're not. I don't think they're going to go back to a place where they don't care about that at all.
Some of the more troubling stories to come out of fintech, some of the stuff with the bank partnerships. I know
Yep.
that there's been a couple of the writers on LinkedIn certainly real hard at some of the actors in the space. Is there we were always worried about this fear of bad stories in fintech kind of paints the industry in a certain way. Has the industry grown up enough that some of the stories aren't going to be too impactful on the broader market? And how does some of these actors that have got into this mess, how do you see some of the things that have played out the last, say, 18 months or so?
Yeah, I mean, it's the biggest travesty in the history of fintech. I think that it started with the Synapse,
Yeah.
bankruptcy, and the fact that these there are consumers that had their their life savings in a fintech that had FDIC insurance on their on their website, that because they were banking, they had a partner bank that had FDIC insurance. That was all true, but the failure of the fintech, and it really wasn't the fault of the fintech itself. It wasn't even potentially the fault of the bank, although we are keeping hearing on more and more problems at one or two of the banks that were involved. But it's such a travesty that these people lost their life savings and they're not going to get them back. I mean, that's reality. Just talking with Jason Mikola, who's done more investigative work in this area than anybody else on the planet, and he thinks that the bankruptcy is going to be wound down, the Synapse bankruptcy, and these people are just they're going to get pennies back on the dollar of what they had. And so that to me has been a black mark on fintech. It's been interesting to see, like, it was a really when this all happened a bit over a year ago, the press jumped on it, and there was lots of terrible stories about they trusted their money to a fintech. Now, we haven't seen a lot of follow-up stories. There's been the occasional one. So the damage to fintech, I think, was contained. If we have a situation where this happens again, we are in deep shit because that's where, I mean, like the one time it happened, we hope to have learned from this, and I think, the reality is every fintech now, this has caused every fintech to have compliance front and center and to have record keeping front and center, because this was a failure of record keeping from the intermediaries, and that the money disappeared because the record keeping was not up to scratch. And so I don't think it's done it certainly hasn't helped, hasn't done huge harm, but we have to be very careful now in the future.
Profitability has been another area in fintech that, has been hard to come by for a lot of the fintechs. It's also a lot of the reason why a lot of the lenders have moved to other products, and some of the other fintechs have moved into lending to try to expand, their revenue sources. Kind of, if you're looking at it from a high level, has the model of fintech lending itself worked, and what can be improved from a profitability standpoint? I mean, is it all a scale question?
Yeah, I think the profitability of fintech lending, I think, has been disappointing for many people, myself included. I feel like if you told me 10 years ago in 2015 that there'd be lots of the major fintech lenders still are not making profits, I would have thought that was crazy. Of course they will be. They'll be at really large scale and making huge profits, because if you look at the banking system in general, banking is highly profitable. You can go and look at all of the S&P 500 banks that are out there, or actually any publicly traded bank for that matter, and you can look at their multiples and see that lending money, and that's where take away the top 10 banks where they make a whole bunch of money from trading and doing securitizations and other things like that, IPOs, that if you look at the lending area of banks, it is hugely profitable. We're talking billions of dollars in profit every quarter for some banks. So it's not a case of the mechanism for fintech lending, and fintech lenders, they know how to underwrite just as well as the banks.
A lot of the bankers went to fintechs.
Exactly. Exactly. You had
so the models are similar now.
Yeah, you have like all of the Capital One people. There was people out of all of the big banks. You've had some really deep experience in credit have moved to fintech. So it's not a case of not being able to underwrite. It's really been a case of customer acquisition costs That is what has really done in fintech lending. Particularly, it became quite competitive. There was lots and lots of lenders going after this near prime, prime, and super prime tech segment, and spending a lot of money to attract these customers. So I like SoFi was the first to really say, right, we are spending a lot of money on attracting these customers. Let's offer them lots of other products. And now SoFi have a very, very extensive suite of products. And SoFi, you can look at that. They've been a public company for a while. You know, they're profitable for the most part. Lending Club, they're profitable for the most part. But then I just was reading last week, Upstart didn't turn a profit. They have been a big success story in many ways. But I think that what the challenge now is that there's so many, like Lending Club are turning a profit, didn't really turn a profit consistently until they became a bank, because that's where, same with SoFi.
Yeah.
That's that's how banks are able to they get cheap deposits and lend out. When you're not getting cheap deposits, that you're paying an average of like 1 percentage point to on average, it's harder to make the economics work. So I think that lending, and all lending is happening online for the most part these days. Lending is a highly profitable venture, but the marketing piece has to be in place properly.
Is there enough, or what does the current startup scene look like, especially in the lending space? I don't know, it feels like there might be, a little bit of a lull right now with new lenders coming up. Like where is the early stage lender today?
Yeah, so I think there's not as many. If you go out and try and raise money for an unsecured term loans, consumer lender, without being really differentiated in any way, you're going to have zero chance of making that happen, because that is a really well-trodden path. But there are innovations that continue to happen. I was just talking to a lender or a fintech last week that has created a way to tap into a HELOC, a home equity line of credit, with a credit card offering. Now, those are two highly mature products.
Interesting.
But no one has married those two products together yet. And this company has, and they're a startup. They got 6 employees, and they've been able to figure out how to kind of blend those two. So that's the example of a fintech that is new. It's a startup happening. Like getting still a long way from getting traction, but that's a great idea. And so we're going to see. The American entrepreneur is incredibly creative, and we will still see lots and lots of innovations here, particularly as crypto kind of gets going. I think we're going to see a lot of activity there. If we can get the crypto legislation in place this year, I think we're going to see another kind of area. Like, we're going to see much more attention paid by entrepreneurs to the lending side of crypto. That's always been a little bit. There's been a lot of DeFi stuff happening, but it's always been fringe. There has never really been a whole lot happening in the mainstream there. I think that could change. AI is going to bring its own. We're already starting to see AI being impacted in the lending space. We've had AI in underwriting for a long time, but there's going to be other areas where that impacts. So I think you got to have new ideas, you got to have new applications of technology, but it never stands still. There will be lending innovation happening in 10 years' time that we haven't even seen, that no one has no one has thought about yet. This person could be in high school or college that's going to create this company. So I think you're going to have innovation. Never stops. And lending, it's really attractive because it is such a big market opportunity. People like to borrow money, particularly in this country. There's all kinds of different ways to do that, and there will continue to be ways to do that, and entrepreneurs attacking it in different ways.
So we have just a couple minutes left. end with some fun questions as we get to the end of our episode here. Favorite sports team or hobby?
So, as you know, Todd, I'm a big Denver Broncos fan, and they have had a lean decade since Peyton Manning left us. It was a lot of fun when Peyton Manning came to Denver for several years. We won one Super Bowl, probably should have won more, but yeah, that was a lot of fun. But since then, it has been pretty slim pickings. We're hoping Bo Nix, our new quarterback, can improve on his first year, and I think we've got an opportunity to do. We made the playoffs last year. That was an achievement, and we hopefully can go a little better. No one talks about the Broncos in regular in the NFL circles, and I think we can do. It's been
a while. It's been a while. One surprising thing about yourself.
Oh boy. Okay, so what probably no one realizes, I have a 950-day streak on Duolingo, which is coming up on 3 years. And that's I'm learning Spanish because it was actually when I did a trip to Mexico City. It was in 2022, and I came away frustrated that everyone could speak English and Spanish really well that I spoke with on that trip. And I thought, I got to do something here. And so I started, you can't become fluent doing Duolingo, but what you can do is it really helps you to read, being able to make sense of written language. And I think I just enjoy it. I feel I do my Duolingo every single morning, and it's just part of my routine.
Speaking of reading, what book would you recommend the audience read?
Well, I read a lot of fiction, and I've ended my day for the last 30 plus years every single day with reading some fiction. I just finished this book, Trust by Hernan Diaz. It won a Pulitzer Prize, and often I don't like the Pulitzer Prize winning novels, but this time I thought was really interesting. It's a historical fiction set in the 1920s New York with an incredibly wealthy businessman. It's a little bit of a funky book. It's sort of written it's like 4 books in one, so it's the same story is told from 4 different perspectives. I really enjoyed it. I love sort of the whole learning about high finance in the 1920s was a trip for me.
And the final question, give us at least one prediction for the next year.
Okay, so I don't think we haven't seen a big fintech lender be acquired yet. I feel like I know there are some talks happening right now, and with a big fintech lender and a potential bank. So I'm going to go out on a limb and say that there is going to be a reasonably large bank acquire a fintech lender, a very established fintech lender, in the next 12 months.
And with that, Peter, really appreciate you coming on the show, and thank you for your time. Good to see you again, and all the best to you, Marcy, and the family.
Thank you very much, Todd. Always fun to chat with you. See ya.
See ya. Thanks for coming back to the latest episode of the Credit Clubhouse. We are your one-stop shop for all things credit. We have an exclusive offer for our listeners. If you're interested in attending any of our conferences throughout the year, we have a great deal for you. Just head to www.DealCatalyst.io, pick the event you want to attend, and enter the promo code CREDIT at checkout. This will give you 10% off any ticket to any conference. As always, don't forget to follow the show, rate us, and leave a review.